All right, good morning, everyone. 8 a.m. Sharp on Thursday, June 4th. Four official members now, so thank you. I do see two in the room that haven't signed up yet. If you would like to, the free part ends this week, so going into next week, costs you $25 a month. If you want to sign up, go to ototnow.com, join a squadron, and it'll walk you through. You can play right there on the site with the credit cards. So the mission objectives for today are the standard objectives. As far as tactical, we're going to look at social media, not necessarily Southern California media, but social media this morning. And the names you can see down below are your Facebook, Snaps, Twitter, Match, which is match.com, Google, and Trade Desk. And then for our incremental stuff, it's going to be investing in treasuries, which if you saw my questions pop up, we're going to talk about why would I invest in treasury bonds? They don't pay anything. So why would I have money there? And there's definitely a reason. Okay, standard market flow. There's the long-term names we talked about. We'll go through the open. There is a name that I'm going to talk about a little bit in depth. Okay, Predator, you're not hearing me? Put the volume back on. How about now? See if that changes anything for you. We're working some issues on our end, primarily related to FinViz. They keep running. Every time I go to FinViz, it runs this big ad. So continue to work that there, Predator. So, all right, that's what we've got for the overview. We're going to go up to the TD Ameritrade for our market review and see where we've been. All right, nice run up, obviously, into February. We had the big 35% sell-off. And then this, I saw a headline yesterday, the move up from the bottom of the March 23rd lows up until yesterday was the largest, the fastest single 50-day move in history. And I saw another one that said 6-week move, which is ish, right? It's in that same category. So pretty amazing move up. So going into, go ahead and mute that again, see if it's on our end. We're, Predator, if you've lost us there, type something in because we're troubleshooting on our end what we can do with our volume here. Okay, so going in, we've had this huge move up. So big 4 days in the green there. Today starting out in the red. This is one of these, even if today's a 1% red day, that would not even be abnormal at all. So when I start thinking of that as far as long term, okay, if you're looking to put some money to work, you might get that opportunity today. If you're thinking short term, then you can think, okay, if the market's down, the market's run up, a lot of things were up 10% plus yesterday, might not be a bad day to hop in a short. So I'm pretty excited for how it's setting up, at least for the day trade scenario. Okay, and then when you look at the specifics, there's the year-long SPY bringing it in a little bit closer. You have that big move up. Yesterday, we were going to close up really big, and then we had that pretty decent sell-off into the close. I don't remember what headline caused that, but that was a headline thing. Pretty much retraced it back up after hours and then down this morning. As far as earnings, one of the things we're going to talk about is Gap Stores is in the news, and that is the short that I'm going to be playing today. Their earnings are after the bell today. So this is one of these. We have a huge negative headline today. The stock ran up 10% yesterday. Already is down a few percent. We'll get an update that in here in a minute. They have earnings, which I expect them to miss wildly after hours today. So this would be a case where I would do two things. I would nibble, meaning if I was going to take a couple hundred shares of this, I would already own some. I wrote down that I would have shorted 100 shares at 11.51 already pre-market, expecting that this is not only just a down move today, it might actually be a swing trade to hold overnight through the earnings. Just covered a bunch of advanced topics there. Forget all that if that didn't make sense. But if it does, it's that kind of short. And we haven't really had one of those stories for a while. Since AMC, which actually I got a little birdie told me they declared bankruptcy yesterday. I did not confirm that. Okay, as far as the actual There we are. The tech issues on my end this morning. Apologize for that. Okay, here's where we are with the futures. I'll refresh that. Okay, down a little over 100 points in the Dow, and then a little bit about the same across the board. Check out where we are on, well, we'll see this in a minute. Okay, Europe's down, even though they did have a big headline this morning about they passed some, it was after their markets closed over there, so it'd be more of an impact for our market or their market tomorrow. But the European Central Bank did pass a stimulus bill of 1.35 trillion euros, which is about 1.5 trillion US dollars as far as stimulus for getting their economy back going for coronavirus. So expect Europe to be in the green tomorrow off of something like that. Asia, pretty quiet for all things considered. Here's our a look from yesterday. Again, the big move up and VIX is down. Going in with you could even think VIX long around in here. I'm not sure it's going to stay below this. We also we'll get into headlines in a second, but we got a jobless claim number that was higher than expected. So expect some negativity in the air. As far as the bonds, which we are going to talk about treasuries this morning, again, we've been in the green here almost every day. So if we can just get that up to about 1%, which is still ridiculously historically low, then that would be great. But we shall see. Oil, again, there's negative headlines out, the doubts over output cuts, meaning the OPEC thinks that folks are speeding on the actual outputs, the actual output that they're limited to, which is not good. So that's the headlines that's the overview around the world. Okay, as far as jobless claims, the numbers are probably going to be down in here somewhere, but it was higher than expected, just a little bit, not a tremendous amount, but enough to be concerning. And then if you remember, jobless claims come out on Thursday, and then the official unemployment number comes out tomorrow. I think that's supposed to be somewhere around in the almost 20%, which remember we were worried about the 30%. So we'll see how all that plays out. That could be an interesting story to follow. Sure, there's people declaring that COVID-19 is over. I would say it's just out of the news, right? It's been trumped, if you will, by another headline. But certainly there's many unknowns about COVID-19 we don't know going forward. Yeah, it's actually a 4-day rally, to be honest. I read that the airlines are projected to be back over 50% capacity by the summer, so people are buying up tickets left and right. They're dirt cheap right now. But people, I don't think, are scared of flying as much as they were, or they're just tired of it and moving on. Okay, as far as this is going to be at least the short I'm going to be talking about later. Simon Property Group, that's the real estate investment trust we've talked about before. Again, parent owner of the property, the tenants, i.e. stores like Gap, which is several stores like Old Navy, and there's different names. Banana Republic, I think, is under the Gap structure. But all of those, they basically stopped paying rent to Simon Property Group, and they closed some stores. And the underlying issue is, if you remember when COVID-19 was kicking off, is the president, as well as several others, said, hey, if you owe rent, just don't pay this month, which was one reason why I had to move out of many of the real estate investment trusts almost immediately, because that's a scary comment of don't pay your landlord, whether you're a person or a business, is not good for the economy. So that's one thing. And then the other side of the coin is, Simon Property says this is a contract, so you are going to pay, we are going to get our money, and things, since everybody's kind of gotten healthier, we'll see, pretty quick, then it becomes, does Gap have the ability to pay? So to the tune of, when you think big numbers, to the tune of 115 million a month is what Gap is skipping out on to Simon Property Group. So I don't know where your sense of humor is on how much you would allow people not to pay. Mine is significantly lower than 115 months. So good on Simon Property Group for suing them. So we'll see how that works out. Hey, I didn't see this until, it's because it's 1 minute ago. Charles Schwab, TD Ameritrade. Everybody that I recognize from the group that's here today are either with one of those two. Again, this merger is supposed to go down later in 2020. Both TD Ameritrade and Schwab have been a little bit swamped lately, trying to do all of their operations from home. And secondly, Schwab just got all of USA's investment management, is all Schwab now. So they're having to repaper those. So been busy in Schwab world. The customer service has been off a little bit, and there's been some delays in processing. But all in all, I think things will be healthy going into the merger, and then same thing, it's going to slow down while everybody merged. But for the folks that are on here, if you're a TD Ameritrade person, you'll get repapered to Schwab probably by the end of the year, maybe early next year, and we shall see. Okay, a lot of folks know I'm a big fan of General Mattis, so I was kind of happy with what he said, because I do think the president is divisive. I was kind of sad that he said it, because there's a code amongst retired general officers to kind of keep your trap shut. That it's not necessarily their role to influence or discuss politics and politicians. That's kind of an old school thought. So some may disagree, call me old school in that category, because I just don't think retired general officers are supposed to be squawking. Even though he was a sec def and all that, it's kind of like, you shouldn't talk, but that's me. Let's see. Vegas opens today. Again, it's expected to be muted because of the social unrest. So there are some significant concerns there. Costco should be up. They had fantastic numbers coming in. All right, I think that's it for headline review. Let's take a look at where we are again, just 100 points down in the Dow, and we'll go up to the big Schwab board and talk about our social media firms. Now, investing in social media is a little bit tricky from a perspective that the social media itself doesn't necessarily make money, i.e. Facebook is free. And I've often said that they could charge something, kind of the Netflix model, charge enough to be a nuisance, but not so much that people won't pay. There's Facebook in the upper left. Obviously, that's by far the biggest name in the space out there. They've already recovered back above their where they are as far as the big sell-off. So not their all-time high. I can't remember. Maybe it is an all-time high for them. So up in the 230s. So there you go. It is an all-time high for Facebook. So how do they make their money? They make it through advertising. I'm going to do a little bit on a podcast later today with a media firm. They're talking about some of these things, but the advertising right now, there's kind of two sides to that, right? That's the first budget to get cut in a company is the advertising budget. But then again, from a business perspective, it's a time like this where if you maximize your advertising, you can get the most bang for the buck as people now return to stores and restaurants and things like that. So there's kind of a double-edged sword there. One thing, if you haven't heard me talk about it, I can, as a small business owner, put $50 out there for a week and run an ad and targeted and talk about a specific event and try to generate a client or two in a week. And that's really pretty amazing that you can do that simply from your own home and the keyboard and a credit card. So that's pretty good. Snap is the upper right. Again, Snapchat, more popular. It's a different dynamic, more popular with the youth. I have it on my phone. My girls snap me on occasion as the only male in the house. So yeah, there's fun filters and things, I guess. What I don't see personally and what's kept me out of the name, even all the way through the drop and back up, is I don't see it as a good platform for advertising. I just don't. Maybe I'm too old to see that, so I will recognize that I probably have a bias there, but I'm not in it. I don't recommend it, and it may go off and make a killing. I don't know, but it won't be with my money. Okay, Twitter. Twitter, again, has some challenges there it's not the best platform. I'm not on it, but I'm not, kind of against it. I think it's a great idea and I need to be on it. That's just my laziness for not having been on it yet. But I don't really, from what I've seen, I don't really understand how their ads can have the same effect as Facebook. I mean, in Facebook, you scroll through, sometimes you're reading something, you don't even know it's an ad. So kind of brilliant. Same with Google. You can Google search something and you have to fight through the first, 8 lines of ads, some of which you don't even recognize as ad, even though it does say ad right there in green off the left. I think it's green. So I wouldn't go into Twitter either. Obviously, there's some fights recently between the social media groups and the president on what should they be censoring. We have an election coming up, so I should say, as a whole group, if there was a thought that COVID-19 was going to stop the fundraisers and everything from going off in person, right? So you can't have these large groups of people. And in that case, all of your big, political dollars were going to flow to Facebook. So if that happens, then I do see a significant climb there. Okay, over to Match.com. That's a little bit of an oddball. It owns Match and Tinder, and there's probably others that it owns. I don't necessarily know their business model on how they get paid, if it's straight advertising or free to play or whatever. But I do know that it's certainly more acceptable than it was 20 years ago, right? It's mainstream now for folks to be online matchmaking, if you will. So something to consider. I won't put my money in it just because I'm not super familiar with it, but it's out there. Lower left, Google, that does get my money. Ding, 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 big believer. Not necessarily a fan of how they do business, but I am a fan of the results they get, and it's almost complete margin. Like I said the other day, for me to get Round Rock Financial Advisor for my business to get to the top of the search page was going to cost me $5,000 if they wanted to do it for me. Like, no, I'm not paying that. It's not that important to me, but I'm sure there are those that it is that important to, so they'll happily pay. And then at the bottom right is Trade Desk. Now, this is a name you may not heard of unless you're in the digital space. And that's digital advertising space, but I'll be talking about this company a lot later. Today is they IPO'd in 2016 in September at $18 a share. And look at them now. I've been an investor for a little over a year. This is not something I found on my own. A client brought this to me and said, this is about as gold as you will ever find. And he has been absolutely correct. It is high risk, and very speculative. But basically, Trade Desk, if you think of a big market, it's a market for digital advertisers. There's folks that have all of the ad suppliers out there, and then there's the demand folks for ads. So it puts all that together. They get their cut. Billionaire founder, he was already a billionaire before he founded this, so that's kind of different from the ones that become a billionaire, like the Snapchat dude. He became a billionaire with Snapchat. It's Elon Musk was already a billionaire when he founded Tesla. So a little bit difference in results when they've already made it going into there. But Trade Desk is one of those. I love it. I think it literally prints money. I have not bought a share recently, and I can't pull the trigger at $3.55. That's kind of ridiculous. But when it opens 4 years ago at $18, there's people at $100 that couldn't pull the trigger anymore. So that's it for the longs today. So let's go over and switch to the other layout. Upper left, you can put GPS, please. Okay, this is the Gap stores, and then the headline that we talked about is the ones that are popping up there. So they closed yesterday at $11.95. That gray areas, you can see them dropping off into the pre-market here. So only down a little bit. I'd expect it to be down more. Like I said, this is one where pay no attention to that chart. Even though the chart jumps up to $11.95, that's not real time. It's down. Look in the upper left for those numbers. Is what you want to look at. So let's talk about shorting a name before we go all the way around. I will talk about this is a story I believe in strong enough to where if your R was 300, say, which means if you're going to send with the stock at $11 ish, I think a 40-cent stop is kind of safe. So you do the math, that's about 800 shares. So if you were going to go into the open, I'm going to end up taking about an 800 shares. This is a time when you would what traders call nibble. where you take 100 shares short, and I wrote down 1151 as what I would have taken. I didn't do it real time because I was busy getting ready for this, but I'm going to do both here soon. And that where I would watch it. So right now it's at 1142 or so, up upper left numbers. So that's another thing. I would sit there and stare at this thing to the open, and I may take another couple hundred shares. So if you take 100 shares and did you put a stop in? Well, yeah, you still have a stop. I wouldn't put it in there because at 100 shares, if my R unit is 300, that's $3. It's not going to move $3, right? So it's not going to move against me $3 for darn sure. So you could take another 100 shares, and then your stop moves to $1.50. Again, it's not going to be a player. So that's where you can nibble into that position, and there's no commissions anymore on trades. And I was doing this with a $6.95 Scott trade commission because it still paid off. But you can nibble into your position so you're not buying all 800 at once. Once the market opens. So something to consider, kind of advanced. Probably need to not do that today, but think about it as we go into the future. And again, throughout that, I'll just finish my thought on Gap stores here. With their earnings coming out later, this is where even if the trade works, if it doesn't work, you get out. I mean, you just got to stop your loss. That's the whole idea of having an R unit. But if your trade works and you had 800 shares, I would leave probably 200 shares cooking overnight because I do think they're going to whiff earnings. So we'll relook at that again tomorrow. Okay, let's go around our tabs. Click on Genius Brands. I'm not familiar. The top one there. Don't see a headline associated on why this is gapping up, and I'm not familiar, so I wouldn't touch it. American Spirit's up 13, American's up 8%. That's off of that 65 number. UAL, I just can't see everybody diving into the airlines and getting the move to the long side that you want, especially when the market's in the red, even though Dow's only down 75 points now. So we shall see. It might even open in the green. You have TD Ameritrade up there. That is probably off of the TD Ameritrade merger getting approved. So that's an interesting story, is AMTD long. Can double click on it, bring it up on the left. So lots of headlines associated with that. Closed at 41, it's up at 44. Could be interesting. Not super excited about going long. Boeing, I couldn't go long again. It was up 12%. It's already up 5% pre-market. I'll cheer for it for my long-term portfolio. Could not trade that. Okay, move into the next tab, please. eBay, we talked about eBay yesterday. Click on eBay, see what the headline is there. See if this is earnings. Okay, earnings, yep, everything's up. People sitting at home. Maybe this is a name that's been slightly left out from the big run up in Amazon as people aren't thinking about eBay. We talked about that as a potential competitor. So you could have eBay long. I would not put my dollars behind that, but I think that you could support that thesis. And it's got the 100,000 volume that we're looking at, and it's got that 5 to 10% move up already, which means it has more to run. Costs go up a little bit. All right, let's go to decliners, see what we have for short. Smartsheet, all right, considering I saw that pop up down, saw RCL and TIFF, yeah, Tiffany's failed merger with Louis Vuitton. Gotcha, we'll take a look at these. So let's double click on Smartsheet. It does have the volume. It's gapped down a little more than a lot more than I want. It's down at 18%. So let's see, you have to be really bad on the headline. Analysts say sell-off is overdone, though. That's not the biggest move. Click on gapping down, the headline right there. Let's see what other names. So I think that's gapped down too much. I'm not going to touch Smart on the way down, but you could. Not saying it won't fall off a cliff. Scroll back up a little bit. Okay, MIK, CLDR. That's Cloudera, I believe. I saw that earlier. Put CLDR up top. Yeah, Cloudera. They had earnings yesterday, I believe, on a downbeat revenue forecast. So that's a name short as well. Dropped from 1240 down to 11 already. So we shall see. We'll put that on there. CLDR short. All right, got 5 minutes to go. Let's go back up to the decliners just real quick. Palo Alto Networks. Oh, that's a beloved name, but it's been going straight up, so I'm not worried about that. And then Alphabet. Yeah, it's not down much at all. Okay, go next tab. Spirit gapping up 14%. Really wouldn't touch it. NEO's up again. Jeez. It's up over $6. We talked about it yesterday as it just cracked into $5. So it's going straight up. I can't touch it. I just can't do it. There's MGM up on volume. So again, you could take a casino theme long today. Them being a couple hours behind us. So the initial numbers and stuff may not be out. I don't know if they open at midnight or like 6 in the morning. That's kind of interesting. Probably midnight, right? Degenerate behavior. So, okay, let's look at the NASDAQ, the next tab. There's eBay again. We have that down in our long look. Okay, and the last one, pull up FOSL. That's Fossil. It's kind of a niche retailer that's been beaten up pretty good. They're gapping down just a little bit, pretty low volume. This is something I would look at into the open. It would be on my, okay, if all the things I'm looking at don't set up or whatever, I would switch over to Fossil and kind of take a look from there. Okay, let's see what the other ones, put RCL in there. Okay, RCL is on the way down a couple bucks, looks like maybe 4% or so. Let's see. Issues some debt. So yeah, you can read that as good or bad news. Let's go ahead and put TIF. Again, Louis Vuitton was going to buy them out and didn't. So 114 gapping down to 112. So they're not going to buy them out. So I don't know how negative that is, but if you're looking for something short, something to watch. Okay, we got 3 minutes into the open. You remember the new rules now. So you put in your trade. You want to put in the stock. You want to put long or short. You put your stop in, whether it's 10 cents, 20 cents, 40 cents, $1, and then you can put in your start and stop time if you want. The defaults are open time and 20 minutes after. Or you can actually go with a delayed for like 3 minutes to like 15 minutes or so. So what I'm going to take a look at, I'll go ahead and get my trade ready to go here. While we set that up, we're going to put my trade, which is SPG. Short, we'll put that in the main screen. We're going to put, let's see, need a stop from you, burner, on what you want in there. And then SMAR upper right. And let's put FOSL in lower right. It's pretty thin. All right, there's mine. I'm going to take SPG short with a 30-cent stop. I'm opening it at 3 minutes and then closing at 15 minutes. Okay, so that's what we've got. Going into the bell, we have yesterday we didn't have the charts. We will always have these charts up going into the opening bell. So if you don't see them, just say chart in the chat and we'll go from there. All right, we got the stop in there. We got RCL for there and SPG. So just the 3 trades. The other folks looks like they're taking a pass unless they get it in pretty quick. All right, there's our bell. Are these 1 minute today charts? Yep. Okay. Sounds good. All right, we're just checking a few things there. All right, back to the overall market. Refresh that. We'll see what the market's doing. It opened down 64 points, so just barely into the red. So SPG looks like I said I would take it at the 3 minute point. Looks like Burner took it at the market. So falling off the cliff there. So you can get and draw for Burner, the 70 right there, the top of the dark red. You'll need the pencil there. That'll be his open price. I'm sorry, it's GPS and SPG. Thank you. Sorry about that, everyone. I've been clarified. So that is GPS short at the market. So he's going to draw the opening price there is down at 11.31, it looks like. I'll confirm that real quick for you, Burner. Buffoonery on my part. I meant GPS short. What did I put? SPG. So I would kill my trade off of that right there. So, okay, 11.31. So yeah, let's put, yeah, GPS there. Sorry about that, everyone. Okay, I still like GPS short. I just now realized that those are the same tickers reversed, so that's kind of weird. So looking for an entry, if you were to take this real time, which I actually like, I would be excited about pulling the trigger right in here. I'll tell you exactly when. So don't draw his, you'll draw mine. This will be a real-time entry. Okay, take it right here. So it'd be 11.62. This again, if I was going into this real time, 11.62 with a 40-cent stop up at 12. 12.02 technically, you're right. So if you're doing this time real time, this is where I would have taken the trade. We'll see if that holds from there. As far as Burner's entry, 11.31, so 60% stop. So he's got all the way up to 11.91. So it looks like that should hold easy. So you can see the difference in R for a 60 cent and a 40 cent stop there. All right, let's go over and check out, let's see, RCL short, 2 minutes in and out at 5. So we're open now for, okay, so yeah, Predator, nice pop up there at the open. That's the, yeah, rate keep going up higher. He would have been up right at 570.89, yeah. A little bit lower, 57.89. He'll draw your line there. So that may work out. That was a nice entry. So when we talk about watching it for a second and letting it back up, obviously for the day trading thing, you just have to guess. But when you're watching it real time, yeah, you'd wait for that to back up, just kind of like GPS did. And we'll see. Let's on the bottom right, let's go back to Fossil. Again, we were looking at Fossil short. Moved up about 25 cents, so it's actually up on the day. So I'd keep watching that, but probably not take it. Let's go AMTD in the lower right. Okay, again, that was a long, so it really hasn't moved under volume, so probably not going to get a big move out of that, so we don't need to look at that anymore. Let's look at eBay long. Okay, really not moving. Let's refresh the market and see where we are. We'll see what the market's doing overall. Lots of green names on the left, but market's holding just lower here. All right, let's see. Predator said he was in at 2 and out at 5. We're in minute 5, so we'll see where he closes here. It looks like he will be in the green for sure. And that was a 20-cent stop. So 57.82. Gap stores keeps climbing. Pretty shocked about that. Pretty convinced it's going to be heading down later. This is one of those where if you were an advanced trader, you could add in here. I wouldn't go ahead and add right now. But all right, seeing if RCL holds the end of the minute here. There, the minute closed out. So the top of that green, a little bit lower right there. Lower. All right, 57.76. 57.76. That's 6 cents into 20. That's going to be 0.3 R for the Predator. Over here, we'll see what we've got. I think it held the stop. So 31 up to 91. So for Burner, you're still in there. And again, I killed my trade because it's buffoonery on the symbols. All right, lower right, let's check on SMAR. See how that turned out. Again, SMAR was going to be a short. Doesn't look like it's playing out yet. Look at RCL, just fell off the cliff in the upper right. So yeah, same comment, right? So yeah, so that's when you see it striping down like that, if you haven't heard that term, that is some mass selling. So that's a dollar move right there in RCL. So you can't do that with just selling 100 shares, right? I mean, that is a lot of people selling shares or taking it short from that kind of triple, quadruple topish kind of setup. So that is a very nice move. I do think we see that in GPS. We have not seen it yet, obviously, so I've been wrong. But I would not really even be all that worried about GPS. Some things folks will talk about in the trader world is they'll look at kind of the pre-market, the highest pre-markets on basically bring it over from that point, and they will adjust their R to make sure that it's 5 cents above whatever the highest pre-market was, and that's how you know your trade is busted if you're going short is, if it ever goes 5 cents higher than it ever was in a 4-hour period pre-market, then yeah, it's going to fail. So, but right here, I think we have a pretty setup in GPS, and we'll just sit here and watch it fall, hopefully. All right, so while that's up, I'm going to go back and talk about the market itself. Again, market's down a little bit. Let's go to the left of the ThinkPipes platform. You can see the Clickstream is just kind of a smaller penny stock name. 10% up. There's Boeing, Delta, Northwest Bio again. They're on the short list for the vaccine, I think, if I remember right. Southwest Airlines, DraftKings back in the green. Newmont Mining, YCBD is a psychedelic firm. Sirius FM, again, just prints money. Shopify just prints money. Tesla's up a little bit. All right, let's see what the big losers are. BOSQF is a psychedelic firm. So is Shroom MF. I think they've been on the top of the board of shame for 3 straight days, if I remember right. Those others are calls. Trade Desks that I'm talking about earlier is down 2%. They've just run up so much, it's kind of crazy. I mean, over 1,000% in 4 years. LCMB, small name, bank, Palo Alto. I can't imagine they'll be down too much more than a couple percent today. So not really a lot of big names down big. So with that, going back to the upside, gosh, and the good news out of Europe, I don't know, maybe the market does end up today. Yeah, GPS, we finally got a decent, that's only a dime. But yeah, I think that will continue to fall off the cliff. And for some of you that I've had a private conversation with, that's kind of the perfect entry on not what I did, but I was a little impatient and took it basically where it's at now. But had you kind of waited for a red bar to take the trade, you would have gone all the way to the top, gotten that bounce off 1185 and been able to capture this whole move down. So you're never going to do it perfect, but I do think that's a good trade, and I think it continues down significantly. All right. SPG is actually fallen off over there. I won't even go back and reconstruct my trade to see if it would have worked because it was buffoonery. So, okay, let's go on into the notes and see what's going on. Stopped out on SMAR and TIF, but made 3R on RCL. Okay, he's talking about paper accounts there or real money, either one. So yeah, so when you think of your well, if you got stopped out and used an R unit, you'd be up 1R if your R's were the same there. So I got you. I see what you're saying. So you made 3R in the play account on Royal Caribbean, stopped out on the other two. So that's how you can see with our system, you can actually only be right in one of three, and you're still up an R. So that's why it's crucial that you hold out for that 3R stop, which I like that GPS. I still think it's going to go. We'll see. All right. Burner took SPG short. Yep. It's 74.59. So yeah, I got a good buck. Little $100 out of SPG short. Yeah. And look at it now. And again, I would have thought that was a long name, but goodness, look at it dropping. It's rolling over. Maybe there was a headline or something about the lawsuit not going through, but I don't know. Hard to tell. Okay, up in the question section, busy day. 4 people just left the room while we're trading. Okay, if a company does a secondary offering and we are invested in that company, should we take any action like selling the stock? It seems like they are taking our ownership. Well, so here's the little bit longer answer on that is, yeah, when they issue more stock or they give out stock incentives to their executives, it's dilution. And now it's small if they have like 10 million shares outstanding and they do a 500,000 share. I mean, but it is, and it adds up, right? And they can do it whenever they want. So it does dilute our shares. Now, but do you really take action? Generally, no. But you might, because you're on the investable thesis and how much they make money, not really how many shares there are, sort of thing. But overall, yes, it is a headwind, if you will. Now, they Burner moving markets. I like it. I think that short move's probably done, but man, did that fall off in Simon there. I don't think Gap is done. I think it's just going to continue to sell off. So here's the, yeah, I agree. You can dilute your partners out, and you've seen more than that in the social network. So here's what's funny. If you watch politicians and the talking heads that are out there, everybody is up in arms about share buybacks. And they're like, it's a terrible use of their funds. They should be paying out to shareholders. What? Or they should be keeping it for their war chest, i.e. sitting at 0%. What? And not using it. So a share buyback is actually one of the strongest signals out there, because you're actually increasing ownership fractionally. So when Apple went into this, yeah, we're going to buy back a billion shares. It's like, yes, please, I'll buy more. So to answer your question, no, I don't think I would sell on a new stock offering, but you've seen the stock get a hit for sure, because it's an earnings per share. Obviously, if you mess with the fraction in the denominator, that changes the math. So that's why the stock gets hit there. So good question. Let's clear that out. Okay. That's kind of interesting to continue to watch. So it's a live trade, but let me talk about treasuries real quick. Look at RCL, just continuing down. That's a 57. That's over a dollar move. So, man, just there it goes. Okay, Treasury. So why would you ever want to use Treasuries? Obviously, every morning we look at the 10-year Treasury paying a whopping 0.7%. Okay, so that's a terrible number, right? So why even bother? Why don't you just put money in the bank? Well, first of all, a lot of folks that are in the look at the gap, continuing on down. The a lot of your higher echelon, millionaire and above, or multi, 2 to 3 millionaire and above, they have their brokerage account as their checking account. And it's kind of crazy watching the transactions, because I see transactions in accounts and watching, daily transaction going zipping out of an account. It's kind of interesting to watch. I have 2 accounts that do that now. And so you can do that. So you don't need a bank anymore, because, like, say in this case, Charles Schwab or TD Ameritrade becomes your bank, and you have checks, you have debit cards, you got the whole slew. And it's kind of like just investing so you get out of this mentality of emergency fund versus just I have a net worth and it's put in my brokerage account. So if all of your money is sitting in your brokerage account, then you can see that you're only going to get just a fractional interest rate if it sits in cash. You don't really want to let it sit in cash. So what you do is you move it over into a treasury fund, or that's one of the options that you can. Yeah, GPS, even SPG. They're killing me on these names, but they're both short, and even RCL, all 3 are selling off. So I don't want to take you off of those charts, but I will. We can come back to it. So let's go to. We're going to go back to looking at put in G-bill under search quote. I'll show you something real quick. 1L. There you go. So when you park money like this, it's kind of like, yeah, we talked about that before you got in, Burner, about the whole thought there. And I actually, I bought some shares pre-market at 11.51 short in Gap. I didn't actually do it, but for my paper trade, I would have. But okay, here's what I want to show you is on CNBC, when you look at this sawtooth down there, this is a 1-year chart that you're on. So G-bill pays out like a bank. In other words, the money you have, if you put $100,000 into G-bill, it accrues daily and pays monthly. So think about those words for a second. Accrues daily, so meaning if you put it in for a day and then move it, they owe you 1/30th of the month, and you will get that at the end of the month. Okay, you don't get it right away, but it does pay out monthly. So it's one of those names along with the royalty income that gives you that monthly income that you can kind of count on. Now, when you look at the 1-year period, generally these things are pegged to 100, right? That's their index. So it creeps up above that, and then it sells off a little fraction. But even though this chart looks significant, remember that's only 75 cents total off $100. So 0.75% from top to bottom there to the bottom of the chart. So you can see in times of uncertainty, a lot of money floods in, and now that it's less certain, but still kind of uncertain, it's down to 50 cents above par, if you will. So that's a good place to just put money into when you don't know what to do with anything. You just click it and you go from there and hold it. And you can move in and out. So if you do get to the point where you're actually writing checks out of your brokerage account, even if you don't have the money available, you'll want margin on your account. So basically the money moves out of the account, and then whoever's managing your money can go in and see, okay, we have a margin. They can basically sell G-bill to backfill that margin. So that's one way to do it. But I did want to show that to you. So did I answer my own questions? Why? Yes. How to? Yeah, G-bill. You can also use SPTL. It's the exact same thing, except not just quite as good. When you think of expense ratios on these things, it's fractional. I mean, it's like 0.02 or something like that. And with treasuries, they also have a 20-year treasury. The U.S. issued a 20-year treasury. There is talk in monetary theory of going to issuing a 30-year and also a 100-year U.S. treasury. I think that's more of a sign of desperation if we would actually issue those. So that would be concerning. All right, you can clear that out. Let's go back over to the TD Ameritrade. Okay, checking in on our board, we have gap almost down to the entry point there. And are we at minute 20? We're right at minute 20. So from Burner's market entry point at 11:31, it'll need to strike down pretty good here pretty quick. Otherwise, he'll be negative in that trade, which takes him out of the trade. So we'll see how the minute closes. RCL, if I were trading RCL, I would give up for the day. I'd go, okay, that was a heck of a move, right? From 57.90 all the way down to into the mid 55s. So, all right, as far as Simon Property Group, I wouldn't have them short. I would have taken them long, so I'd have been wrong in that one. Okay, let's see. Burner closed out there, closed at 11:39. It's the next one over, the green candlestick there, the top of it. So 11:39. So in at 11:31, out at 11:39 short. That's negative. So Burner's out of the trade, which means Apex Predator is the winner for the day. So good job. Let's see. My trade, which I buffooned, I would have opened at minute 3. So 1, 2, 3 would have been up at 11:69 and would have closed at 15. Yeah, so that would have been a pretty good trade had I typed that in correctly, but I didn't, so I have to live with that. So, okay, we've got 8 minutes left. Let's look at other questions. Otherwise, I'll let you go early. So besides Apple, what stocks would you recommend to just buy and hold for 30 years? No, I don't think Tesla exists in 5 years. I really don't, but we shall see. Immediate names that come to mind are Amazon. Yeah, it sucks at $2,500 a share, but just buy it. I used to say Starbucks. I can't say that anymore, but I may say that again. But some of their politics have really turned a lot of people off. So that's a tough one. Let's see, other names that come to mind: Blackstone, private equity firm, best of breed. You can buy and hold that forever through the ups and downs. Realty Income, which is O. You can buy and hold that pretty much forever. Let's go to SPY and the Jeep in the big screen here. We'll see what the market's doing. So there are names. So hey, the market's not quite to the green yet, but getting pretty close there. So some other names, if you think big names, I mean, what used to be the buy forever and hold would be Ford, ExxonMobil. Obviously, I don't think Ford's a hold right now. ExxonMobil you could go into, but it's not something I'd be so excited to hold for the long term. BlackRock is one I could hold for the long term. Again, you'd have to assess the thesis on it every year or so, but that's certainly, if we would go through another aftershock, a big dip down, I'm not looking at selling any of those names I mentioned, except for Ford, which I wouldn't be in. But if any of those drop down, I'm just looking for an entry point to buy more. So, all right, good question. Go ahead and close that out. All right, shorted another GPS. Let's put GPS in the bottom right. All right, at a short at 1182. So yeah, that's working. So yeah, that's where that can lead to having a lot of shares. So I'm still surprised it's pushing back as much as it is. If it were me and I were taking it live, I would just short it. I would leave a couple hundred shares short and leave it through earnings for gap or after today. So something where you can, it's not going to move $3. So 100 shares at a $300 R, you can hold these short overnight. I rarely do that, but I would in this case, have no problem. I may actually watch it and take some short later today. So we shall see. All right, with that, so again, Apex, that's 2 in a row. So well done. So I'll add that to your free month list, and we'll go from there. So same time tomorrow morning. Last time it's for free, and we'll see you tomorrow.